Hello, everybody. Welcome again to yet another accounting adventure of our lives, right? Today we're going to be looking at cash and cash equivalents. We're basically going to be looking at doing a bank reconciliation. Exciting. This is by the accounting professor Bennett Tchaikovsky, 2008 to 2024. All rights are reserved. Any redistribution is expressly prohibited without my prior written consent. Opinions expressed herein are those of myself and do not represent those of IVC or the South Orange County Community College District. Okay. Now, when we're going through and doing a bank reconciliation, this is a very important part of what companies have to go through and do, and what we should all be going through and doing on our books. And why is that? Is because banks make mistakes. And so when we're going through and doing these bank recs, it's basically a way we have of taking the books that we have, uh, what we've been going through and recording transactions, and I'm basically reconciling it with a third party statement. So let's go through over here and see how we do this. So we've got Rick Pickle on 7/31/29 had a bank balance of 90,000 and a book balance or balance per books of 80,000. Okay. When I do these questions, right, what I'm going to go through and do is I'm not going to start doing journal entries. Rather, what I'm going to do is I need to get down to an adjusted bank balance and then an adjusted book balance. And these need to equal, right? If they do not equal, I have a problem and then I screwed up creating this question. Okay. So let's go through and look at these during July. So, what is a deposit in transit? Well, a deposit in transit means that the bank or the customer made a deposit to their bank. However, either the bank has placed the deposit on hold or it has not received the deposit yet. So here, the deposit in transit, because it was already reflected as an addition, a deposit into my account. So this is going to be, we're going to add in plus deposit in transit, and this is going to be for $40,000. Okay. So coming right over here, basically you've got a deposit in transit. Now, bank service charges. Okay. What exactly is a bank service charge? Well, the bank charges me for having a checking account. So generally what happens at the month end, I don't know what the bank charges are going to be. It's kind of like a Spectrum internet bill or a Verizon bill. You don't know exactly, kind of the approximate dollar amount, but you don't really know. So when I see a bank service charge, that's going to lower my book balance because basically the bank's taking out this money and saying, hey, dude, you don't have this anymore. So coming over here, this is going to basically be a bank service charge. Okay. Interest revenue. Okay. What exactly is this? The bank gives us interest. So if it's showing up as interest, I wait until the end of the month to go through and record it on my financial statements. So over here, I'm going to have interest revenue. So this is going to increase my bank account. Okay. Now, what are outstanding checks? Well, outstanding checks are those checks I've written on my books, but they have not yet cleared the bank. So over here, remember, some people do still use paper checks. So over here, outstanding checks. And again, what is an outstanding check? It's basically going to be an outstanding check is a check that was written, that was reflected, payment that was reflected in the books, but not yet reflected on the bank statement. show as a reduction to the bank balance. The deposit in transit, a deposit made on our books, but not yet reflected on the bank, show as an increase to the bank balance. Okay. So again, these bank service charges, might as well go ahead and write these out too. Charges on our bank statement. We reduce our book balance. Interest revenue, income on our bank statement. We increase our book balance. Okay. So coming over here, we've got a bank error. Okay, so what exactly does that mean? Let's read it. A deposit was posted, and let me just show this as a negative amount. Okay, so a deposit was posted to our account in error, meaning it should not have been there. So this is that 18,000 was put into our account, should not be there. Of course, we're going to call the bank immediately. Yeah, we do actually want to. So less bank error. So over here, this is the 18,000. I'll just go ahead and highlight this here. So we have that as a reference. Okay. Now, this is a deposit that was made to our account that should not have been there. So I'm going to reduce it. Now, but if a withdrawal was made by the bank in error, right? They took out 9 grand. I'm going to need to add this back. Okay, right? So withdrawal, add less bank error deposit. Right. So here in the 18,000, they gave us money we should not have received. But over here, the bank made an error. They took out money. So we're going to have to go through and add that back. Now, the last one over here is something called non-sufficient funds. What does that mean? Well, non-sufficient funds basically means we made a deposit. Customer gave us a check. We made a deposit. The bank says, the check cannot clear, does not have enough sufficient funds. So over here, this is going to show as a reduction. We'll call this non-sufficient funds check. Okay, so we'll call this a NSF. A customer gave us a payment that we recorded on our books as a deposit. And so because the customer had insufficient funds, we need to reduce our book balance. Okay. Now let's go ahead and look at this over here. RPI recorded the check for rent expense on its books for 2,000, right? So, okay, so basically this 2,000 over here, I'm going to bring this down over here just so we can look at these a little bit more carefully. So for this first one on my books, it was showing as a check for rent expense of 2,000. However, the bank correctly cleared the check for 4,000. So there was some kind of a typing error. So since the 4,000 is the correct amount, in order for me to get to the proper amount on this, I'm going to need an additional $2,000 adjustment for rent expense. So my total here to equal the bank balance, which is correct. So over here, I'm going to basically make an adjustment for rent expense. Let's look at the next one. RPI recorded its check on the books for utilities expense for $8,000. The check correctly cleared by the bank for $4,500. The bank balance is correct and my book balance is incorrect. So what do I need to do? Well, I need to get to 4,500. In order to do that, I'm going to have to do an add back of 3,500. So this is going to be an adjustment for utilities expense. Okay. So when I come over here and do this, give it a little green, give this a little blue. So that's going to be a positive amount because I took out too much. This is a negative 8,000. I wrote a check. Bank was corrected 4,500. So to get to that correct amount, I have to add back 3,500. Adjustment for utilities expense. Okay. Now, when I go here and look at this, the big drum roll is when I add up my book balance, less the bank service charge, plus the interest revenue, less the non-sufficient fund, less the adjustment for rent expense, and then the adjustment for utilities expense, I get 61,000. This compares to over here, bank balance plus deposit in transit minus outstanding checks minus the bank error deposit, add the with bank error withdrawal, and I miraculously somehow, some way, this equals 61,000. Always fun doing these kind of questions. Hopefully I don't screw it up on your test. So my adjusted bank balance equals my adjusted book balance. We're good to go. This is a bank reconciliation. Most computer or most accounting programs, you'll basically take the bank statement and you'll basically go through and check what was actually cleared. Okay, so now that I have this part done, this is my bank reconciliation. Now it says over here, prepare any adjusting journal entries required as of 7/31/29. When it comes to adjusting entries, couple rules on this when we're doing adjusting entries for bank reconciliations. Okay. One, we only adjust our books. We do not care about the bank. Okay. B, if there is a negative amount on the book adjustment, show as a credit to cash. C, if there is a positive amount on the book adjustment, show as a debit to cash. Okay. So coming over here, I'm going to need to make 5 journal entries. 1, 2, 3, 4, 5. So let's go through and let's go ahead and set these up. Date, account, debit, and credit. And then we'll call this item. Okay, so item 1 is a negative amount. So I know I'm going to have to credit cash for 500. Okay. And what I can call this is to adjust for bank service charges. Let's go to the next one. Item 2. This is a positive amount. So over here, I'm going to debit cash for $1,000. Okay. And this is going to be to adjust for interest revenue. Let's go to number 3. Okay. So this is a negative amount. So over here, I'm going to go ahead and show this as a credit to cash because the amount is negative. So my cash, and I'm going to call this to adjust for NSF or non-sufficient funds. Check. Okay. Let's go to number 4. Over here, number 4, it is a negative amount. So I'm going to come over here. I'm going to credit cash for $2,000. And I'm going to call this over here to adjust for rent expense. Number 5, this is a positive amount, so I'm going to debit cash. And this is going to be to adjust utilities expense. Okay. So all I've done so far, I'm going to have to come up over here with a, I'm going to have to come up over here with a debit. I'm going to have to come over here with a credit. Here, I'm going to need a debit. Here, I'm going to need a credit. But the reason why I'm doing this first is I really want to emphasize that when you're doing these journal entries, don't make your life difficult, right? If it's a negative amount, show it as a credit to cash. So let's go through and do the first one. By the way, all the dates on this are going to be at the month end. So this will be 7/31/29. Okay. For this one right here, bank service charges. So we'll just call it bank fees expense, right? The cost of basically of having a checking account. Over here, this is interest revenue. So we can call this interest revenue or interest income. Now notice when I'm debiting bank fees expense, I'm holding to my T theory of accounting, right? So when I look at this over here, don't ever forget it. Assets equals liabilities plus owner's equity. ERDC. So over here, I'm recording an expense with a debit. So this kind of makes sense. Now remember, this is not like a adjusting, call it not really an adjusting entry, but making adjustments. It's a better way to put it. Making adjustments for bank reconciliations, because I know that I've said in prior videos that never touch cash, which is absolutely true, but this is a little bit different because we're actually adjusting the cash account. So coming over here, so that's interest revenue. How do I record revenue? I record it with a credit. Now, this is one that'll trip up most students, right? So this NSF check, what exactly happened? Well, I went through and I probably made a sale, right? So I basically made a sale a long time ago. Then the customer pays. When the customer paid me, I debited cash and I credited accounts receivable. Right? That's ultimately what happened. Now, what happened was I took this check, went to the bank. The bank says, so I'm out that cash. However, what I need to go through and do is I'm going to debit accounts receivable. So I want to reinstate the account receivable because the customer, if I have a non-sufficient funds check, the customer still owes me that money. Okay, so this was this was a check that was processed in error. We basically put it over here. This is going to be for rent expense. And similarly over here, this is going to be for utilities expense. Now you may be saying to yourself, Tchaikovsky, hey dude, expenses have debit balances, and I know that they do, but this is an error, right? And so basically what we're going through and doing is correcting this. In real life, you would probably reverse out the error or cancel the payment and then issue a new one for the proper amount. Entirely up to you, but that would probably be a better trail in terms of going through and doing it. So these are the journal entries we go through and use. I really tried with this example to give you pretty much just about everything, but if there's something that I missed or something you want me to address on a future video, please feel free to ask. So I want to thank you for joining me here today. Look forward to seeing you on future videos. Have a great one.